Yo, what's going on, guys? It's your boy Trillionaire Mac, back with another video for you all. Now, this video is going to be slightly different, okay? I get a lot of questions and a lot of DMs about, hey Mac, what are your webinars like? If I join the mentorship program, what can I be expecting from your webinars? So this is an old recorded webinar in 2021 where I am answering questions for students, where I'm going over a couple of trades that we took. As you guys can see, that week we had 11.15%, we had 20.87%, we had 3.33%, we had 9.54%, and we had 3.38%, all taking place in 1 week. So you guys are going to see me break down this for my students. You guys are going to see me answer my students' questions. You guys are going to see me discuss a little bit of my trading plan with those individuals who ask about it within this webinar. And overall, it's just going to be great content for you guys to see what's entailed, right? Now, if you're already a student of mine, this video is not really for you, so you can feel free to click off and feel free to join the Wednesday night webinar that's actually going to be tonight, okay? You guys should all, if you're a student of mine, you should have received that link already. But if you are someone who is not a student of mine, I'm pretty sure you guys will be able to find some type of value. Now, remember, this is a little old, okay? And I believe before this webinar, if I remember correctly, and I think I may mention it within the video, I actually just left the gym. I ran a 5K that day, and I also lifted. So I am a little tired in the webinar. You guys can hear it in my voice, but I still answer all those questions for my students. It's around 50 minutes. Hope you guys enjoy the content. If you're already a subscriber, share this with a friend. All right, share this with someone who is not into trading yet, but who is contemplating on getting into trading. And if you're that individual who is contemplating on getting into trading, hopefully this gives you a little bit more clarity on how easy trading really is. If you're someone who can play a video game, if you're someone who can play a computer game, if you're someone who knows how to code or even just read script, this trading is very, very simple, very, very straightforward, especially how I teach it to my students. Now, I also want to touch on the individuals who have FTMO challenges. If you're having trouble passing your FTMO challenge, I want you to personally contact me on Telegram. Okay, on Instagram or Telegram, but Telegram is going to be a little bit better. My username is @TrillionaireMac on all of my socials. Contact me and I have something for you. Now, the first 3 individuals to contact me about their FTMO challenge, I have something for you. Everyone else after that, I will have something for you, but it's not going to be as great as the first 3. All right, so it is a little bit of a rush, but if you watch this video a little late, feel free to contact me regardless, because you guys know me. I love doing these giveaways, and I love making sure you guys understand this information, and I love breaking it down to you all right? My goal is to assist 10,000 individuals with reaching financial freedom. We are on that path. We are on that journey to hit that number, and when we do, I cannot wait. I might actually retire after that as well. Who knows? We'll see what happens. If you're not a part of the YouTube family, feel free to subscribe to the YouTube channel. Leave a like on this video and leave a comment if you guys would like to see more inside information or more inside webinars as to what you can expect from live trading with me, from joining the mentorship program, and from the course. All the links are in the description down below. Also, guys, if you are not a part of my Telegram trading community, you may want to reconsider. All right, we're going to be doing live sessions. We're going to be doing video outlooks. We're going to be doing a little bit more teaching within the Telegram channel as well. So stay tuned for that. With that being said, I'll catch you guys on the next video. Enjoy this one. I hope you do. Peace out. All right, what's going on, everyone? Hope you guys are doing good. Let me make sure you all can hear and see me. Make sure we're good to go. So today's going to be a question and answer session. We have a lot of new students. We have a lot of new individuals participating within the course, and I figured we'd open it up for questions, things like that. All right, so while I'm getting my charts ready, you guys can go ahead and start dropping your questions in the questions tab below. Questions, comments, concerns, anything like that. All right, so we're going to go ahead and get started with the weekly analysis while you guys are dropping your questions. I see a couple right now. Fantastic, fantastic. Definitely, definitely. Okay, yeah, we have some good questions for sure. Okay. So let's start with the DXY. So, I mean, since last week, we have definitely been waiting for the DXY to push back into this area here, right? So we consolidated just a little bit, consolidated a little more. All right, it looks like price is now sweeping this liquidity here. And what I want to see happen before I take a trade, I want to see price push up into this region here, give us a valid entry, and then push to the downside, okay? If we complete all of those, if we complete a mitigation, we complete a sweep of liquidity and a break of structure, okay, then that would mean that we also have another point of interest that price could later push up into for us to trade from, all right? So we'll definitely have something either take place at this region here, all right, or this region here. And this is pretty much going to be just a more in-depth version of the Telegram update that I just sent. For the individuals that aren't receiving the Telegram notifications, don't worry, everything is being sent to your email. And by now, it shouldn't be going to your junk folder either, all right? So you guys should be receiving at least one video breakdown or video update per day, minimum, all right? So let's see what happens once price taps into this region here, all right? So gold is not ready for us to take a trade just yet. All right, it's very, very close. I would rather us first, let's see if we can, trade a little bit deeper into this region here. We don't necessarily have to, all right, but I would love for price to do so. And if we can, then of course I'd look for a lower time frame entry. Okay, I never take my entries on the M15. Well, I can't necessarily say I never take them on the M15, but I try not to, all right? And we're going to go through this kind of quickly so I can get to you all's questions because I see them piling up and definitely want to make sure we hit them. All right, so for USD JPY, we have to take a minus 1% hit for the Telegram channel for this here. All right, now if you are, let's actually see if we find a lower time frame entry. I personally don't trade UJ like that. It's just not really what I like to trade, to be honest. All right, decent lower time frame entry. Let's see if our stop loss would have covered it. It doesn't look like it. So what was this? Okay, so my minimum is 1.5 pips. 1.5 would have been right here. That's going to be right in the middle of this zone. I mean, it depends if you wanted to cover this zone or not, whether or not this was a successful trade for you. I'm going to count it as a minus 1% hit, okay, for the Telegram channel. I didn't take this on the lower time frame. As you can see, I did have my charts marked up, but after I was taking, after I was getting ready to take AU and figure out what EU was going to do, since I knew I was going to trade London session yesterday, I really wasn't thinking about UJ too much. It's not really a pair that I like to trade too often. It's just simply a major pair, and we go over the analysis within the Telegram channel. All right. We check the H4. For the individual asking, this is the Telegram desktop application. Yeah, you can download it from TradingView. Excuse me, not Telegram, TradingView. My bad. But yeah, you can download it from the TradingView website. Pretty sure. So we've tapped into this zone on UJ. I mean, if we do get a clean transition, let's look at the M15 really quickly. Yeah, I'm just not a fan of how this is turning out, honestly. If I'm being real with you guys, I want to see some type of sweep because it seems like we're just consolidating within this area. Yeah, let's come back tomorrow, maybe Wednesday, see what it's doing. But right now, it just doesn't make sense to force what's going on here. We all know what a good clean setup looks like, and if we don't see that, then it just doesn't make sense for us to try to force a trade, right? These were decent setups, all right? They followed rules, but all of this in here it's not really doing anything for me. AU. So AU had a very clean setup. All right. I was talking to a couple of students about this on Sunday before the market opened. A couple of you guys did hit me up with very, very similar trade analysis, I must say. We tweaked the trade analysis for you guys, and then I told all three of you what we were looking for. Now, I'm not sure if you guys are on the call, but if you are, then AU played out exactly how we thought it would. All right, so if we're looking at on the M15, well, let's go to the M5 actually. It's a little easier to see on the M5. All right, but basically this entire play was, hold on one second. Okay, yeah, we'll get to that as well. I'll get to the questions, guys, once we're done with the breakdown of everything. All right, so with AUD USD, right, on the M5 time frame, it's a little easier to see on the M5 time frame, right? But you can still use M15 structure and things like that. This was a structural point on the M5 time frame, as well as if we go to the M15, we'll be able to see it here. This is one of those nuances where it kind of just takes experience with what I'm doing here, because this isn't really like a true set in stone, easy to view type of structural point. But it's kind of a long explanation. I guess we can go through it. Okay, so we know that here we have some type of pivot supply, right? We see that we have this wick to the downside, price pushes up, we get a little wick on top, and then we push to the downside. We interact with that supply once here, twice, 3 times, 4 times, and then finally we blow past it, right? So in this entire area, I'm not necessarily looking so much on structure or focusing so much on structure. What I'm really focused on is the exchange of supply to demand. All right, mainly because I understand that we're trading into a previous liquidity grab that was responsible for changing structure or changing character, grabbing liquidity, and leaving demand within the market here, right? And we have a lot of imbalance within this area. So waiting for price to trade back into this area and give us a possible entry opportunity is all we were looking for, all right, or all I was looking for. So we go to the M5 time frame. Okay, none of this was really clear, right? This was pretty much just internal liquidity being created. Nothing was, super clear throughout this area until price does this. Create this low here. Okay, then price pushes to the upside, come back down, we push to the upside. We create these lows here, we push back to the upside, and then what happens? Price literally sweeps this low, or sweeps these lows here, okay? Mitigates this here, okay? And then we get a change of character, a break of structure to the upside, et cetera, right? Leaving demand within the market, taking out the supply that was resting here, okay? Basically the same thing we did here, all right? All of the confluences we see here, sweeping liquidity, changing character, supply and demand flip, finished up here, okay? We're simply just waiting on those same exact confluences. Once we see that, we're into the market, all right? Simply just refine this to the 1 minute time frame. All right, and you're simply just flowing with whatever price is doing. All right, you don't necessarily have to choose whether or not to look for buys or sells. The market is going to tell you whether or not to look for buys or sells. Okay, refine this down to the M1 here. I really could have used this inside bar, but I'm kind of getting away from using just inside bars and paying attention to, what's around the inside bar itself. All right, so I just use this entire zone here, tagged in. 1.5 pips was my stop loss, and the rest was history, right? Now, what am I looking for at this point in time? At this point in time, I low-key want to see sells take place, just a little bit, right? Mainly because we've tapped into this zone here. We've actually already sold from here, right? This is an M15 zone. Let's look for our M1 entry. I don't think we completed the M1 entry model just yet. It doesn't look like we have. All right, so what am I looking for? What do I want to see happen? So we see that break of structure to the upside. Okay, after we've tapped into our M15 zone here, Okay, now we're on the M1 and we're going to see how the M1 is going to react. Let's move that out of the way just a little bit. Okay. So we have our breakup structure to the upside. We have our breakup structure to the downside, which is now our change of character. We know that we have some type of demand that comes into the market here. Okay. So we have, I mean, you could have entered here. Technically speaking, you could have definitely entered here. Not gonna lie. Or at least this region here. Price barely taps back into that. So this could have possibly already been mitigated. Doesn't mean price has to respect it when it comes back up to this area. Right? But we still do have this region up here. Okay, that was responsible for sweeping these highs here, mitigating whatever was, inside of this area here. All right, it is very, very slight, but I'm going to see how price is going to react to this. This could also be just a case study for you, right? So you don't necessarily have to take this as a trade opportunity, right? You could have definitely entered here, but let's say you didn't. Let's just see how price is going to react to this piece of supply, okay? It's making its way up to it right now. Okay, it shouldn't be too long before it gets tapped. Let's see if price is going to respect it. All right, and you can use this as a case study. All right, now for targets, where are we going to place our targets at? 115 swing lows. You know what? Let's do something really quickly. All right. Let's see. Oh yeah, 1.5 pips, and you cover those highs. It's not bad. So let's see what price does from here. And remember, you cannot try to cherry pick setups, all right? Unless it's just, not a clear setup whatsoever and there's nothing you can really do with it, then take the trade, right? If it's following your rules, take the trade, right? We have a valid zone and we have a valid entry. Now our entry, our supply and demand flip has not been completed just yet, okay, especially for our apex supply here. So let's see how price reacts once it taps back into that region, right? Now as it relates to the higher time frame on AUD USD. Let's see what happens once price taps into this region here and then pushes to the upside. All right. That's what I'm going to be looking for personally. All right. And then you guys can stay updated within the Telegram channel. So Euro USD was not a bad setup at all for those intraday traders. Hopefully you guys caught it this morning. We see that price taps into this valid apex, okay, supply here. That is also responsible for sweeping liquidity, mitigating this area here, and breaking structure to the downside. All right, once it taps into this area, that's a valid zone. Now, what do we want to do? We want to find a valid entry. Entry took place on the M1 time frame. Guys, this is the same stuff. Rinse and repeat, rinse and repeat. This is exactly what we're playing off of AU right now. This exact move here. Okay, so we have the sweep to the upside. Okay, price even has a candlestick here that sweeps and breaks structure to the downside. Okay, we do take out this demand here. Okay, just a complete wipeout, change of character. And then of course, we're going to enter at the supply that's responsible for taking out the demand. Okay, after we see the change of character. That supply is going to be here. So I just use this entire candle here. All right, price literally wicks into this area, 1.5 pip stop loss once again. Think I'm getting used to it. Who knows? We might go back to 2 pips, but right now I'm feeling 1.5. It was 1.4 pips at at the end of this zone actually, but you guys know I don't like to use anything less than 1.5. Like 1.5 to 2 pips is my minimum, especially with Euro USD. It has pretty tight spread, so this wasn't a bad trade at all. All right, price tags us in, and target was this M15 low. For my personal trading account, I'm not for the Telegram channel or for you guys, but for my personal trading account, I'm pretty much done for I might be done for the year actually. 28% on Euro USD this morning, 26% on AU, 11.15% on a risk entry last week, EJ, 20% on an M1 scale-in entry, 9.54% on the entry talked about yesterday, which we'll go over in a second. So I might be done personally, or maybe at least for the month of November. So we'll see what happens. So this was a pretty successful trade, right? I'm not going to force anything within this area on EU, right? We are in a valid zone. We do want to see a valid entry, but I would rather the M15 give me some type of clear direction first, because with price looking like this, we honestly could just sweep these lows here and then break structure to the upside and then trade from there, right? So I'm just going to have patience. I'm not really liking how price is formulating right now. I'd rather just wait, all right? Yeah, I'd rather just wait. Let's see what happens, but I am kind of bullish. I am a little bullish right now. All right, we're coming back, filling in any inefficiency in these areas, and we could just move back to the upside. This could just be an entire sweep of these lows here. Then we could see that break of structure with a continuation, right? So more than likely we'll catch this on the M15 time frame. All right, now Euro JPY. All right, so Euro JPY, I want all of my students to understand the importance of taking entries on the lower time frame, right? I want you guys to really understand why you should not be taking entries on the M15. You can, if that's what you want to do, you absolutely can, right? But M15 entries are not going to produce what M1 or M5 entries are going to produce, okay? So I want you guys to keep those types of things in mind as it relates to when it comes to taking a trade and things like that, right? Because for example, this M15 entry, okay, just tapping into our M15 POI here, we mitigate this here, we sweep liquidity and we break structure to the downside. All right, it only gave us 3.33% gain. But taking it on the M1, if we go to the M1 time frame, oh, whoa. All right, so if we go to the M1 time frame right here, we can see that we have sweep of this liquidity, change of character, we interact with this demand here. Price closes bearish below the demand. This is the supply that was responsible for closing below this demand here. This was the entry. All right, at the end of our zone, it was around 2.2 pips. Okay, since it's Euro JPY, instead of just rounding up to 2.5, I just rounded up to 3. All right, just to be on the safe side for EJ. Okay, price taps back into entry and then continues to push to the downside. Okay, it's going to be important that you guys apply these rules on the lower time frames. Now, this is what we talked about on the Sunday night webinar yesterday. Hopefully, you guys were able to catch it. If you weren't, it's completely fine. Let's go down to the 1 minute time frame. Okay, so I gave you guys the valid zone. All right, I actually took this entry on the M5. Okay, so I gave you guys the valid zone on the Sunday night webinar, and this was the entry here. It was a sloppy entry, I'm not gonna lie to you guys. I literally pulled up my MT4, saw the confluences taking place, went ahead and just took the trade after I saw basically this change of character, I knew there was some type of interaction with demand here. This took out the demand failure, yes, right? But I simply just used this entire M5 order block here, right? And then price pushes to the downside. We come right back up, tap into this region here, okay? I wanted to see if we would tap a little higher, so I had an alert set below this other zone. If I would have gotten taken out at -1% up here, that's completely fine. I would have just re-entered the market, all right, if I saw another valid entry. But we do tap into this valid zone, and on the M1 on the M5 time frame, we do get a valid entry opportunity. All right, price does travel a little deeper into our zone here. Okay, so we could have actually used this here as the supply that came into the market as a refinement if we really wanted to, and that would have been, an excellent opportunity. However, I did not in this case. I took a lazy entry on the M5, as you guys can see here. All right. If you go to the 1 minute, it'll be a little easier for you guys to see all the entry confluences. Oh. Let's go back. Okay. So we can see, this basically sweeps the high. Price does interact with some type of demand here, pushes to the downside. This would be your supply that you'd be focused on. This to me, I wouldn't go too crazy. I wouldn't be too crazy about here. All right, but even if you did use this area here, that's completely fine because more than likely your stop would have covered the high. So let's say we did use this region here. So 3 pips would have been, literally it would have been right here above the high. All right, and 3 pips is my minimum for GBP USD, GBP JPY. Well, GBP JPY, honestly, my minimum is like 5 pips, to be real with you guys, like 3 to 5 pips, but closer to 5. And EJ as well. All right, simply because of those, simply because of the Japanese yen. Just to be on the safe side with those pairs. So yeah, EJ wasn't a bad move at all. A lot of individuals say that they feel like the trades happen very quickly. Like sometimes they happen slowly, sometimes they happen quickly. That's all a part of trading, right? Because each trade is going to be different. So one trade it may take a week to formulate. Another trade it may take an hour, a couple of hours to formulate, right? You just have to be ready. You just have to be on your toes. I'm not really looking to do anything yet with Euro JPY until we break out of this consolidation area here, out of this range. Maybe we'll sweep liquidity one side, and get a possible scalp or trade from, whether it's counter trend or pro trend. If it's counter trend, we'll probably target, some type of supply here. If it's pro trend, then we'll target, another swing low that we see to the left. All right. Let's start to get into some of these questions as well. Give me 1 second, guys. Okay. Okay, so someone says, how can you be confident in taking your entry? When it comes down to entries, right, you're only looking for a couple of things. Okay, you're looking for a higher time frame zone. It can be M15, so like an M15 zone. You're looking for the M1 to trade into the M15. Okay, give you a sweep of liquidity. Change of character here, and you want a supply demand flip. So if we have demand resting here, let's say price gives us some type of supply here, or maybe even some type of supply here, right? You're going to trade this reaction, okay? Or price can pull into the apex and you trade the apex, okay? If you're afraid that you're going to lose more than -1% on a trade idea, simply just break up your trade into 0.5%, right? So if you have, let's say, a decisional and an apex that you could possibly trade from, then simply just risk 0.5% on both, right? And let's say price trades from this area and pushes to the downside and doesn't tap into this region here. Well, if you get a scale and opportunity, go ahead and drop the other 0.5%. If you don't, then just be happy with half a percent, exposure on the table. Um, so you're never really going to know whether or not an entry is going to work out or not. Your job is simply just to follow the rules. And the rules are very clear, right? Some of you guys send me trades and entries that don't follow the rules and you want my opinion on it. If it doesn't follow the rules, I'm simply just going to say the trades and it's an incorrect entry, right? Because this is how I take my entries. And this is what works. It's like students who follow the rules day in and day out, like it works for them. You guys can feel free to go check out testimonials on my Instagram page at TrillionaireMac. So next question, keeping your composure. All right, so how do I keep my composure? So when it comes to losing a trade, or I'm assuming you mean when it comes to losing a trade. When it comes to losing a trade, like losers are gonna happen, all right, at the end of the day. Our job is not necessarily to win every single trade. Our job is to just manage risk, right? Like, let's see. Okay, we have a lot of questions coming in. Okay, so our job is simply just to manage risk, right? We can't control anything other than pressing the buy or the sell button, okay? But you have to think like an AI system, if then statements. Think like a computer system. If price is giving you the confluences I say look for a valid zone, for example, what creates a valid zone? What creates a valid zone, guys? All right, let's talk about that. A liquidity POI creates a valid zone. What is a liquidity POI? We need price to sweep liquidity, and this is on the higher time frame liquidity POI, right? Because a valid zone can only be found on the higher time frames. So we need price to sweep liquidity. We need a mitigation of some type of order block. And what else? And we need a break of structure. That's it, right? Valid entry. Oh, whoa, 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 whoa. Put it back. There we go. Okay. Now, valid entry. What's a valid entry? Once price taps back into my higher time frame liquidity POI, I'm going to go to the M1 or M5, and I'm simply going to look for a sweep of liquidity, change of character, or change of momentum. I like to look at it as momentum, right? Because it's literally the momentum switching from buys to sells or sells to buy, right? And then also we need a supply and demand flip. Okay, so the only thing that you have to do is make sure that you are finding correct areas to trade from as it relates to valid zone and correct areas to trade from as it relates to a valid entry. That's the only thing you should worry about. Looking for those confluences, pressing the buy and sell button after you've managed risk. If you lose trade after trade after trade, there's something that you're doing wrong, right? And you have to go through your losing trades and you have to go through all of my confluences for your losing trades, right? Look for the sweep of liquidity for your higher time frame POI, your mitigation, and your break of structure. I guarantee you, you're going wrong somewhere. And if you can't see it, send it to me because I will be able to, right? All of my students who, do lose a trade and they can't figure out why they've lost the trade, let's move that back there, right? And they can't figure out why they've lost a trade, simply just send it to me, all right? Have another individual look at your chart because you're biased already, right? You're seeing what you see. You thought that was right. The market went against you. You feel hurt by the market. The only thing that you can see is the market did not do what you wanted it to do. So send it to someone else, have them put their eyes on it, and they will show you what you've done incorrectly, right? So my advice to keeping your composure, just understand it's not you against the market, all right? It's literally you versus you in the sense that as long as you're following the rules and you're managing risk, just keep going, right? Just keep moving forward. Just keep moving forward. If you realize if you reflect through your trading career, every so often you have a paradigm shift. I feel like every maybe 2 to 3 months, I have a paradigm shift, right? And it always comes after I have like a streak of losers, and I'm like, wow, man, what am I doing wrong? And then something shifts, and it's like, wow, now I'm on a next level, or right? And like, hopefully, you guys can start to see that through my my stop loss setting as well, right? Just for the individuals who have been trading with me for some time, right? So that's the best way that I can help out with that. Hey, can you talk about mitigations to the left and how they help you determine whether or not you'll use a POI? So when it comes to mitigations, okay, I want price to, what is a mitigation? A mitigation is when price trades into an order block, okay? It can be an order block or it can be a supply and demand level. All right, so this is the perfect POI that I like to see. Let's say price is within a downtrend, okay? I love to see when price does something like this. Oh, okay, we should be good. Right? I love when price, let's say we have a breakup structure here, right? That means that we have an order block here. It may not be a liquidity point of interest. It may not have swept liquidity. It may not have mitigated something, right? But it is responsible for taking out this demand here and breaking structure, right? So what I like to see is I like to see price do something like this, tap into this after sweeping liquidity, right? Mitigating this order block, meaning trading at least tapping into the range of this order block. That is what a mitigation is. Okay, and then right after that, breaking structure to the downside. Then I know for a fact that this here is going to be a high probability trade, right? And I can look for a lower time frame entry somewhere within this area, and then I can really look for price to target either this low here, if price is pushing up from there, or even this low here, right? This setup trumps this setup all day, right? So you want price to mitigate some type of point of interest, some type of order block, in order for you to consider that a liquidity point of interest, right? So whenever I see a regular order block within the market, I'm looking for it to be mitigated. All right, I'll give you guys an example on UJ, actually, on the M15 time frame, right? We have a regular order block here. Look, we have a breakup structure to the downside with this order block. Yippee-ki-yay, right? Are we looking to trade from this? No, we're not looking to trade from this. What does price do? Price creates liquidity below this order block, trades into the order block, breaks structure afterwards. Then what happens? Price taps into this region, gives us a valid M1 entry, and then gives us 20%, right? This is what you want to see. And as you guys can see, it is my favorite setup. It's the same thing that I drew out here. Guys, this stuff takes place over and over. You just have to train your eye to see it. All right, for those new students, give yourself some time, right? Honestly, if you're a brand new student, you really shouldn't, until you've gone through a lot of the material, okay, you really shouldn't be trading with live funds anyway. All right. Now, I'm not one to tell you what to do with your money because I'm not a financial advisor yet, but you shouldn't be trading real money if you have not at least gone through the course 3 times. All right, I'm going to be honest with you. All right, especially if you're from other smart money concepts groups, because I don't trade like other smart money concept individuals, right? As you guys can already see. Um, you can pick out similar concepts because they're the same across the board as it relates to supply and demand, liquidity, market structure, things like that. But I'm not your typical SMC trader. Okay, so because of that, it's like you almost have to relearn certain things. Okay, so let's get on to the next question. What are you seeing on gold? Um, Honestly, with gold, I have no type of prediction on gold. I just simply trade what I see. So what I see is we're at a supply zone here, okay? And I know that sellers can come into the market for me to catch a, sell to the downside, right? It's not really something that I simply just react to price. That's it when it comes to gold, right? Hopefully we can give, some type of liquidity point of interest within this area. I'm not going to try to predict where it is. For those individuals within the Telegram channel who simply just set their orders, based off of the risk entry on the M15, you guys are in profit, but yeah, but I really don't I just react to gold. So I'll be taking an M15 liquidity POI once it forms. Now that we have tapped into this area here. Or excuse me, we tapped into this area here, so I'll be looking on the M5 for that liquidity POI to form. Now that we've tapped into a valid M15 zone. All right, and now I'll just take the trade from the M5 POI. Let's see. What is the difference between change of character and change of momentum? Change of character and change of momentum are the exact same thing. You can call them either one you want. It's simply just, let's say price is going, pushing to the upside, creating uptrend structure. Simply when price takes the high and then right after it takes the high, it takes the low. Or if we're flipping it, it takes the low and then it takes the high. Okay, it's simply just a change in market trend from a downtrend to an uptrend or from an uptrend to a downtrend, leaving a liquidity POI most of the time. Okay. Don't quite fit my, I feel like I'm wanting to read the charts when they don't quite fit my trading plan. I think I'm assuming there's something. I don't know what I should know. All you have to know are the things within my trading plan. Okay, so let's go to, oh man, I think I deleted it, guys. Why did I do that? Let's see. Ah man, that was a really good trading plan. Oh well, we'll retype it out. But really, you shouldn't be trading anything that doesn't fit my trading plan, right? Like they're really clear and concise rules, right? They're extremely clear and concise. Valid zone, valid entry. Okay, use the information within the supply and demand section of the course, within the liquidity section of the course, and within the order block section of the course to find your valid zone. Then you use market structure, liquidity, supply and demand in order to find your valid entry, right? Like, I think you guys are really overthinking it, right? Like, and if you are having trouble, definitely sign up for a one-on-one session. I can't really see names on here. Names don't show up anymore, so I'm not really sure who's asking which question. I'm not sure if you signed up for one-on-one sessions, but if you don't know what you should, or if you don't know what you should know, that's that's a problem. We have to fix that ASAP. All right. So let me show you something really quickly. Actually, I can't because I'm on the TradingView application. This is not Google Chrome or anything. But once you go to the course, you should have access to my trading plan. Literally, that trading plan is your bread and butter. Okay, that is what you're looking for, step by step by step. That video goes through, each piece of my trading plan. All right, so if you're not sure what you need to look for, you need to go look at the trading plan, and then also you need to back test. Okay, back testing is the only way that you're going to, and forward testing. But if you don't back test, at least like every single day, even if you're not comfortable to trade live funds, at least every single day, be active during the session, during New York session, during London session, during the overlap. Like, be active. Look at what price is doing, right? Like, you have to get used to seeing it in order to know what you need to look for, if that makes sense. All right. Someone says, I still don't understand liquidity points of interest. Liquidity points of interest, they simply just need to do 3 things. All right. And if you don't understand what a liquidity point of interest, it's because you haven't seen it enough, which means I know you haven't, either you haven't forward tested enough or you haven't back tested enough. All right. And I know this because it took me a while to see them or to recognize them after I had already seen them so many times. Right? Like, it was just a pattern that I would see over and over and over. And I would always try to do something like this. And those of you who, like, some of you guys might understand, when price used to do something like this, right? When it used to sweep this liquidity, I used to always place a buy order here. and I used to always get smashed, and price would just continue to push to the downside. So I was thinking to myself, I was like, I see this pattern all the time and I always mess up on it. What's actually going on? So then I started to go through my losses, and that's when I learned about liquidity POIs. And now I only trade from them because it was the only trade setup that I was constantly losing on for some reason, right? And it just turned into a beautiful thing now because it's the only thing that I take a trade from. Um, but liquidity POIs, you simply just need price to mitigate an order block, okay? Preferably before the mitigation, there's some type of sweep of liquidity, okay? And then after the sweep of liquidity, you just want a break of structure or a change of character, right? That's it. And then this here is the liquidity POI. And then you're going to trade from the supply that came into the market here. Boom, right? And I used to always place a buy position here, right? And I used to always get smashed out. And then that's what really, started to make me focus in on, what's actually going on in the market. Like, you guys don't have to trade every single order block. You realize that, right? Like, you don't have to trade every single supply demand zone. Select what you want to trade from, what type of trader you want to be, and then move forward, right? Someone says, why don't you trade from order blocks? Are they not valid? No, you can absolutely trade from order blocks. But what I'm telling you all is that regular order block trading is going to be less effective than liquidity points of interest trading, right? And I don't even know if that's really, if someone else finds someone who trades from this pattern here, okay, I will give you a reward. Find me someone who trades from this pattern. I call it a liquidity point of interest. It may not even be the name for it. All right. Who knows? I'm just the only one that I've seen do something like this. So I've just named it that, right? But it's simply just a point of interest that sweeps liquidity, mitigates an order block, and breaks structure to the downside. And I used to always lose on it. And that's how I started to recognize it. All right. So this is what I would consider, I either say LPOI, okay, because someone just asked, what do I call it? Liquidity point of interest, LPOI, or I say L, and then you'll see a Q, and then POI. All right, either one. So that is what a liquidity point of interest is. How do you stop caring about losses? If you still care about losses, you're risking too much. So if you're risking 1% and you still care about losses, you need to decrease that to 0.5%. If you still care about losses at 0.5% per trade, then you need to decrease that to 0.25%. The reason why you need to do this is because you need to be able to act within the market. You need to be able to press the buy and the sell button without thinking twice about capital. All right, so you need to decrease the amount of capital you're risking until you don't feel anything whatsoever. Okay, and then from there, then you can start to increase it. Like for those of you who watch my YouTube videos, recently in one of my videos, I stated that I was increasing my risk to 2% pretty soon here. And even though it's just a 1% difference, that's a huge psychological difference. When you're used to just risking 1% and you increase that to 2% per trade, because it's almost double everything, right? So, double the loss that you're normally comfortable with, but at the same time, double the win. So an 11% trade will be a 22% trade, so even increasing it by 1%, that is a huge deal psychologically. So if you are still feeling something when you are exposing yourself to the foreign exchange market or any market in general, you need to just decrease your exposure until you don't feel anything whatsoever. All right, that's going to be really, really important. Good question though. Okay, so we touched on that. We touched it for everyone that's asking about entries. This video will be uploaded tomorrow. We hit a lot about entries, and I don't want to. Yeah, we hit a lot about entries. We talked about AUD USD entry, Euro USD entries, Euro JPY entry. Yeah, and then there's plenty of content on my YouTube channel that goes over breakdowns and things like that. I really want to focus on more advanced questions for sure. because we pretty much cover entries every session. So how to know the difference between a high probability trade and a low probability trade. Okay, so high probability is simply just going to be with your higher time frame trend. Okay, whether that's your H4 or your M15, you can choose, or your H1 if you want to trade the H1 time frame. I usually try to go in the direction of my H4 time frame, but I've gotten to the point where I automatically understand what to target, right? So if I'm counter trend, I'm simply just going to target the next zone. If I'm pro trend, I'm simply just going to target the next low or high, right? So, just keep that in mind. If you're counter trend, just don't, well, if you're a new student and you want to trade counter trend, I would recommend not doing so. If you're a more advanced student and you want to trade counter trend, then do so and simply just target the next zone. All right. And then when you're pro trend, such as you're going with the H4 and the M15 is also in that direction, then target, because of momentum that's behind you, then target the next low or the high, right? Someone says, how do I sign up for one-on-one sessions? You can sign up for one-on-one sessions by going to the website, Matrix Trading Group, and going to the membership portal and signing up for a one-on-one session. Oh, one-on-one session times are going to change pretty soon here as well. We're trying to figure something out. I don't know if we're going to do more sessions, like more group sessions throughout the week or what, but we're going to figure something out because we have a lot of students who aren't able to get one-on-ones in. And yeah, we have to do something. So stay tuned for that. The team is growing, so there should be more individuals to do one-on-one sessions and things like that as well for you guys. All right. I mean, with that being said, we've been on this session for around 51 minutes. I'm going to go ahead and wrap it up here. I feel like we went through a lot of questions, definitely touched on a lot of good trades from last week. For those individuals that, aren't seeing success just yet, okay, hang in there, because the individuals that are seeing success, they were once in your shoes. This is all a part of the game. This is all a part of trading. Keep going. But there's so much content as it relates to tapping in on one-on-one sessions, the Telegram channel, the YouTube channel. I upload pretty much 2 to 3 trade breakdowns on the YouTube channel at Trillionaire Mac, so go watch those. But there's so much content for you to put your hands on, okay, just to drill it in your mind. It just takes time, okay? We might even do a backtesting session. I know a lot of you guys like those backtesting sessions and things like that. So when I have time, we might do a backtesting session maybe on a Saturday or a Friday. Usually through the week, I'm super busy, so maybe not during the week. But I will catch you guys on the Wednesday morning live trading session, as well as the Wednesday night webinar. All right. And for the Wednesday night or for the Wednesday morning live trading session, I would suggest you guys hop in maybe, 10 to 15 minutes earlier. All right. Last time, like once we hit a certain number, I don't add any more servers. It's first come, first serve, really. And then for those individuals that contacted me that said, hey, I had to leave or something like that, or I had to leave the app and I tried to get back in and it wouldn't let me. If you leave and someone else comes and takes your spot, it may not let you back in, right? So that's also something to think about. So maybe, pull it up on a laptop or pull it up on your phone, work it out, things like that. But with that being said, I'm going to catch you guys. If you guys do have any more questions, feel free to contact me. This will be uploaded tomorrow for you guys on the website. Much love. Peace out. Support the YouTube channel. Check it out. There's a lot of content on there for you guys to just, get your minds acclimated to the entries and things like that. And also make sure you guys are tapping into the Telegram trades, right? They happen fast, I know, but you guys have enough information to where the Telegram trade should be easy bread for you all, right? It should be easy, percentages, right? I give you guys liquidity points of interest, set your alerts, look for the trades at those point of interest, and you should be good to go. Okay? Don't sleep on the content. Don't sleep on the content. Don't sleep on the content. All right? With that being said, I'll catch you guys on the next one. Peace out.